today I'm going to go through the best stocks you can buy for 2022 that are currently on sale. Hi, this is Mosh. I'm an amateur trader and investor. Anything I learn, I teach you guys. I'm going to go through the best US, UK and Chinese stocks that I think are currently undervalued or have a higher potential for growth. Today I'm going to focus on the technical analysis of these stocks. I'm not going to go through the fundamentals, otherwise it will be a very long video. And when I invest in a company, I make sure they're financially secure. What I mean by that is they have strong revenue or strong revenue growth. So these companies are not going to go bust or get liquidated any day soon. All right, first we start off with Nio. Nio has been one of my favorite stocks since I started in the investing game. I initially bought Nio around $4. Imagine that. As it currently stands as of today's date, it's at $30. Now the indicators I use, I generally look at the volume, I use the RSI, and I've got my 200-day moving average, which is a dark blue line, and I've got my 50-day moving average. Now, as you can see, it's recently taken a bit of a battering. This is due to many factors, but personally I think mainly due to the issues with Chinese stocks, the delisting worries, China's changing policy, but hopefully that shouldn't last long and that should change. Now the reason why I think this has strong potential is they've had strong year-on-year growth, and if we look at the technical analysis side, for me, there is a massive descending triangle that is taking place. So if we start from here, go all the way across. Now, a descending triangle means basically as it gets closer to around this point, it should break out on the upside. And with Nio, you can see there's some strong support around between $28 to $31. They also have an earnings coming out in March. So I think as we get closer to February or even sometime soon, we might see another little dip. It should break up to the upside and get to easily around $40, especially by the time or after this earnings. The next stock I want to talk about is IAG, the International Consolidated Airlines Group, basically British Airways, and I think they have Liberia as well. Again, this is a stock I've been in and out of, and I'm planning to go in again. Now, I'm not going to go in just yet. Currently, it's at 140 pence. And you can see the graph is quite hard to make sense of because it's been a bit all over the place due to the pandemic. I personally think it will get to around, there could potentially be another drop, okay, around this level here. The reason I say that is because I personally think the UK has a very high chance of going into another lockdown around January time. So if that happens, this will take another battering. So I'm going to wait. When it gets to 120 mark, I'm going to go in because eventually the airlines will recover. They'll recover from this variant as well. The second UK stock, again, is to do with airlines, but they're more engineering based as well, which a lot of people forget is Royce. This is another stock I've been in and out of and made good money out of as well. So again, with IAG, I think this will potentially take another drop. It will get to either the 100 or maybe just below the 100 pence mark. If it gets below 100 pence or below £1, I'm definitely buying as much as I can. Because for me, this has always been a nice solid stock and a strong company. Okay, the third British stock that I'm going to look at is Boohoo. So it's an online retailer and you can see it's taken a massive battering. The reason is its last quarter, it didn't do very well. And you can see the performance, the 3 months, 6 months, year to date is minus 66%. So it's taken a massive battering. Now, its revenue is still very good. And if we go back further in time and where it's at, the last time it was this price was around November 2016. So if we go to this earnings, back then it was making £12 billion in revenue. Now, currently, its last earnings was £97 billion. So when it was making, as I said, fundamentally this is decent company. When it's making 12 billion, it was around this price, and now it's making a lot more than that. But obviously, its profit margin has taken a battering due to the pandemic, supply issues, whatnot. But I think it's a company that can quite easily cut costs because it's an online retailer. And to cut costs in online retail is pretty straightforward. So my price prediction for this is it will go back towards its 200-day moving average, which should drop down to around 200 pence. So we're looking at about £2. And remember, if you want a free share worth up to £100 with free trade or trading 2-on-2, all you have to do is use my link in the description box below, open up account, deposit £1 and you get your free share. All right, lastly, as this is a very quick update, is Alibaba. Now, Alibaba has taken a massive battering, and I still think fundamentally it's one of the strongest companies. Now, its previous earnings wasn't the best, but it wasn't terrible. Its estimate was 31.65 billion and it reported 31.12 billion. The key worry with Alibaba has been its delisting issue. Now, it is quite complex where basically anyone foreign, so UK, US investors or European investors, you don't actually own the actual stock of Alibaba when you buy it through its US listing. You're actually buying a stock of a company in the Cayman Islands, and there's a complex process to this. So you can research that in your own time. Now, the problem is if it gets delisted from the US exchanges, that stock becomes valueless. That's why it's taking a massive battering. Now, this has a potential to absolutely go ballistic, through the roof. I think back well over $200 easily. The only thing it has to overcome is this delisting issue. If it overcomes a delisting issue where there's not going to be any delisting and everyone's very confident with that fact and the Chinese back off, then this is going to go through the roof. Especially the next earning coming up in February. You can see the estimated revenue is around 14 billion. They've had Singles Day. You've had the Christmas period. And Singles Day in China basically make the most money for companies like Alibaba. So I think the next earnings will be strong. We just have to overcome that delisting issue. Now, if you're not an investor and you still want to make on the stock market but don't know what you're doing, go check out my video of Invest Engine, and they're a managed portfolio where they invest your money for you for a really low fee, 0.25% annually, which is the lowest you can find in the whole market. So definitely go check that video out.